Hi everyone, on today's video I'm going to speak about 5 stocks where I am undertaking a lot of loss. Am I going to sell these stocks? Am I going to hold these stocks? So this is the precise conversation I'm going to have with you. Many of you keep on commenting that Akshat, you recommended like Amritanjan 2 years ago. So by the way, I did not even have a YouTube channel 2 years ago, but people keep on commenting random stuff which confuses other people also. So I thought that this video where I'm going to explain about my loss making stocks, hopefully it will give you more confidence. Before that, very quick macro points. Point number 1, take a look at this graphic and you will see that I'm sitting on roughly 7% profit on my mutual funds. I have only index mutual funds, which I have spoken about multiple times on several of my videos. These have all been purchased this year itself, and I am already at a 7% profit on the index funds that I'm holding. I have already booked profits by swinging some of it. So my total profits would come out to be around 12-13%. Now I'm not telling you this story to boast about that, hey, how great an investor I am. I'm telling you this story because I hedge, and every sensible investor hedge their portfolio. Hedging simply means that if you are buying some volatile or aggressive stocks, then you will go and buy some defensive stocks, or you will go and buy index. That is how you will hedge your portfolio. Now people simply forget about this. Point number 2 is that as retail investors, since we trade in cash market simply means that we actually take deliveries of the stock. We are not going to futures and options market. So we only make money when the stock market actually goes up. And for the last 1 year, what has been happening? That market has hardly given any return. Point number 3 is that there is something called as building your position. Now, building your position simply means that let's say that you're looking to invest 1 lakh rupee on a particular volatile stock. Volatile stock means it goes up very aggressively, it comes down very aggressively. So let's say that I'm talking about some stock. Let's pick Indiabulls Housing Finance. I'm talking about that stock. People will pick that 1 lakh rupee. People will also sell their house and invest in Indiabulls Housing Finance, all that money next day. No, that is not called as building your position. That is called as foolishness. So building your position means what? That you're splitting this amount into maybe let's say 4 installments, or you are splitting this amount into 10 installments, and then you pick up points where you need to invest. So that is a sensible way of building positions. In case you're new to the stock market, or you are at an intermediate stage and you don't know about all these strategies, then please do not invest your own money. It will be detrimental for you. I am telling this to you in very clear-cut language. Go, please check out some of my small cases in the description box. Check out my member community on YouTube. I keep on explaining fundamental points. Try to learn from it. Similarly, give your money to small case managers. They will manage it for you. So check out all these resources in the description box. You will be able to better your understanding. So with that said, let us kickstart our video. And the first stock I'm going to speak about is Amritanjan. So very quick information about Amritanjan, that it is an FMCG company. Basically, it is into pain relief management system. You might have seen that yellow color Amritanjan balm. That is one of the most tried and tested products for the company that has survived for several decades. And it is one of the flagship products that the company sells. Over time, company has relieved pain relief patch. They have released sprays and bunch of other different things. On top of that, they have gotten into newer segments. For example, sanitary pad market. This company is right now mostly concentrated in South India, and they are expanding all across India now. But to cut the long story short, it's a small cap company and it is an FMCG company. Now, with that lens, if you check Amritanjan from the top, it has roughly fallen by 32% from its top. Is that something that is fundamentally off about Amritanjan? If you're having all these questions, then you need to do a little bit of more fundamental analysis of the stock. So you need to ask yourself a basic question as to why the stock price for Amritanjan has fallen so aggressively. So there are a couple of important reasons here. The first and foremost is that due to the recent inflation problem, a lot of FMCG companies have suffered. Now, it's not as if every type of FMCG company has suffered. There are only certain types. For example, I've been speaking about HUL. Please go on YouTube right now, type out Akshat HUL and look at since when I've been making HUL videos, that I'm betting heavily on it. I'm pouring in a lot of money, etc., etc. Why did I make those videos? Because a company like HUL, which is again into FMCG, they have something called as the pricing power. Take a look at this chart, and here you will see that HUL has increased prices of their products quite aggressively. Why can it do it? Because HUL has different brands. For example, Horlicks is a brand that is well known. Similarly, Lux is a brand that is well known. Similarly, Lifebuoy is a brand that is well known. So with these well known brand, a company like HUL can keep on increasing the prices of their product even in a high inflationary environment. So as a result, HUL has done fairly well already. There was a lot of negativity associated with HUL. Please go back 6 months back and understand that point. And I was still very, very bullish about HUL. Why has Amritanjan not been able to do it? Simply because of the fact that the brands that Amritanjan controls, they do not have a similar pricing power to Hindustan Unilever. So the price of the products has not been raised. But unfortunately, their input cost means that if Amritanjan is making one balm, then how much money they are spending to make that balm. So that entire cost price increase for the company has gone up due to the rising inflation in the world. So as a result, the profit margins for the company has gone down. And as a result, the prices have come down. The second reason for the price fall can be understood through this chart. So take a look at this. This is the small cap index chart. Why? Because Amritanjan is a small cap. And if you check small cap, even now they are down by roughly 8.5% from its peak, when Nifty is trading at almost 3 to 4% discount from its peak. So there is an immediate 4-5% gain that can happen on small cap stocks in case the market overall rises. So because of these two reasons, Amritanjan has fallen. So does it make the company entirely bad? Absolutely not. There is nothing fundamentally off with a stock like Amritanjan. Now, why am I saying it? So just take a look at the sales number. So you can see that over the last 3 years, the company has not had a problem with its sales. It's the profit margin that they have had problems with. This means what? That as soon as the inflation problems gets under control, and the inflation problem is already getting under control. How do I know it? Please go and check my last macro video that I had done. I will put the link in the description box. Please understand it, that how much time will it take for the inflation to come down in the economy. Is it a recommendation from my side for you to buy, sell, hold? Nothing like that. Please do your own analysis. I am just presenting my viewpoint here and telling you very, very honestly what I'm doing in the market. On top of that, think about it this way, that for the last 2 years, the markets have been underperforming. It's not as if that we are in forever a bear run. Bull run will start. What type of stocks will grow the fastest? Mostly the small cap stocks. So from that perspective, I still feel that Amritanjan is a very good hold at this moment. Okay, so now let us talk about the second stock, which is Indiabulls Housing Finance. Okay, so a lot has been said about the stock. I made the video somewhere in November last year. So let me take you to the chart and let me quickly explain what has happened since then. So Indiabulls Housing Finance was sitting on a ton of really bad debt. And they had an asset quality problem which came into light, and as a result, the stock price started to get crushed from this point all the way from 1300 rupees to approximately 320 rupees. So this was the first major reason for the fall with Indiabulls Housing Finance. I had not spoken about this stock up until this point at all. Then it consolidated over the next 2 years. And where did I speak about the stock? I spoke about this stock in November, and again, I will put the link to that video in the description box. Please go and watch that video, and please concentrate on the word that I will buy Indiabulls Housing Finance in 10 installments. That is something I said over and over and over again on that particular video. What does 10 installment mean? It simply meant that, hey, I'm buying my first installment here. Then I will look at the performance of the stock, how it is doing. Then I will probably do my second installment. Then I will continue to aggregate and build my position. What did people understand? That, hey, Akshat is buying Indiabulls Housing Finance in November. Let's sell our house and put all our money in Indiabulls Housing Finance and get rich tomorrow. So it is fine if you want to blame me, but let me help you understand the entire story about Indiabulls Housing Finance from this November onwards, because that is when I started tracking the stock closely, because that is when I had taken position in it. So after that, there were 2-3 events that had happened. So the first event took place when Sameer Gehlot, who is the lead promoter of the company, he was made to sell his equity. What is meant by made to sell? Basically, there are existing set of investors who pushed Mr. Sameer Gehlot to sell his equity. Why? Because the company was, in a way, managed by him and it has performed really badly. So he had to sell whatever equity he had or larger chunk out of it to other investors. So which other investors took position in Indiabulls Housing Finance? Large FII took positions. And here are a couple of investors who picked up Sameer Gehlot's stake. So as a result, people felt that, you know what, Sameer Gehlot is selling his equity. So something wrong with the stock. It fell a little bit more. Then what happened? The second key reason, okay, so there was something like an ED raid that happened, which no one could have anticipated from March onwards, and the stock further fell. On top of that, add to the fact that markets have generally been falling from November onwards. So as a result, the situation right now is, at least I can explain my part of the portfolio, that if I had to invest 10 lakh rupees on Indiabulls Housing Finance, I had in total invested 2 lakhs. And on that, I had taken approximately, let's say, a 35% hit. Now, have I been bankrupted converted by this stock? No. Why? Because I still have 8 lakh rupees to go, which I will deploy when I feel like that the stock is likely to give me a run up. I will wait and watch. Market evolves, and so you have to evolve your theories. What am I doing about Indiabulls Housing Finance now? I'm holding it. I am confident about the stock. Does it mean that you also need to go and invest your money? No, please don't do that. In fact, I'm not even going to stick my neck out and start explaining when am I going to buy this 8 lakh rupee more, because this is a dangerous stock. I have learned my lesson that no matter how many times I tell people that, hey, I'm going to take position in 10 installments, people would not listen. And if the stock does not start running, then it becomes a problem. So why stick our neck out? In case there is enough support, maybe I'll start thinking about disclosing all these positions in the future. As of now, I'm not telling it. Whatever positions you have already built, hold it. Why am I saying it? Simply because take a look at this graphic and you will see that it's simply a question of asset quality. That the asset quality of Indiabulls Housing Finance has gone up. The housing finance market hasn't performed for the last 2 years. If you don't trust me, check the performance of HDFC, Housing Development Finance Corp. Look at its performance. It has given close to 0% return over the last 2 years. So I hope this helps you understand what exactly is happening with Indiabulls Housing Finance, and accordingly, please complete your research and take positions, sell positions, build more positions accordingly. Okay, so the third stock is Zomato. The moment I said that, you know what, Akshat, Zomato, what type of a company it is a loss-making startup, it is this, it is that. Okay, so please hear me out first, right? Then post negative comments, it's fine, right? So, okay, so here is the story. So Zomato got listed at approximately like 120. It went up all the way to like 150. And you can see that it got crushed by almost 70% in total. And now you can see that it is hovering in this particular zone. Now, please tell me, all the people who keep on commenting negative things about Zomato, please go and watch my IPO video on Zomato. I was one of the very few commentators who said that, hey, it is a nonsense IPO. Please do not invest in that IPO. Did I invest 1 rupee in Zomato? No. At the time of IPO. Here, no. Here, no. I did not take any positions here. When did I actually start building my position? I started building my position somewhere here, when there was a very clear indication from Zomato's side that, hey, we are going to focus on profitability. Now you'll say that, Akshat, how do you know that they are going to focus on profitability and not revenue growth? Okay, so please go and watch some of my previous videos. I had shown you one of the letters by Y Combinator people, and what they have asked their startups to do is that, hey, focus on profitability. Then why do you think right now Byju's is panicking? Why are they moving towards profitability, not growth? Same reason, that they are backed by investors who want these startups now to focus on profitability, not revenue increase. Every major funded startup right now is pivoting its outlook from accelerating growth to accelerating profitability. Now you will say that, okay, fine, investors are pushing these startups to become more profitable. Makes sense. But how do you know that they are actually converting that into numbers? Is there any data to prove it? Yes. Take a look at this chart. What you will see is that advertisement as a percentage of sales has been coming down. Where do you think majority of Zomato's money goes into? Marketing. So they are focusing on profitability, and actions suggest that. Now again, is it a push from my side that go sell your house and invest all your money in Zomato? No, right? Please be sensible. Please learn how to build positions. And if you don't know how to build positions, please don't do stock market on your own. Please don't invest in stock markets on your own. Start slow, learn things, and then build your positions over time. Here you will see that there has been a massive interest in Zomato's accumulation. A lot of big ticket investors are buying Zomato. Again, not a push from my side to go and buy Zomato. This level of interest has not been seen on Zomato for a while. Now comes a very natural question, because so far from every YouTuber, you will keep on hearing this thing, right? Because this is something that they picked during IPO days, that, you know what, this is negative, net profit is negative, so it will never make money. No, it doesn't work that way. So Zomato right now is hypothetically available for, let's say, 60 rupees. Do you think that if a company like Zomato becomes profitable, when this numbers turns positive, can you guess the price of this stock? Why would it be available at 60 rupees then? If the technology has already been proven, if a startup has validated that it can survive the funding winter right now, it can go on to become big, it is generating profit, then you will realize that, okay, you know what, then let's become like investors in Zomato at 1000 rupees. It doesn't work that way. If a startup actually becomes a mainstream corporate, so to say, then it would be available at a very high price. That's a simple point. Right now, you are taking a lot of risk with a stock like Zomato. Therefore, you are paying a lower price for the stock. If all the uncertainties are solved on Zomato, then why will you be getting at only 60 rupees? So I hope you get that logic. Finally, take a look at the investor holding. You will see that FIIs and DIIs both have increased their position in it. And a lot of stock holding has been cut by public. Now again, not a push from my side to make you go and invest in Zomato. These are just contrary points. Just because I'm speaking about contrary things does not make me right or wrong. Any investor investor who is taking 10 bets in the market, even the biggest of the biggest investors, they will go wrong about 3 or 4 stocks. I can very well go wrong about Zomato. But what am I betting on Zomato? I'm betting on Zomato's brand and its ability to expand and their vision, what they have set for profitability. I choose to believe in that narrative. Can I be wrong? 100%. I can be wrong. Let's move on to the next stock, which is HDFC AMC. Now, here is one interesting fact about HDFC AMC that if you take a look at last 1 month performance, the stock is up by 15%. Okay, so that is very interesting that Akshat, you have been speaking about and you have been bullish about HDFC AMC for such a long time, and now it is giving like a performance of 15%. Why is it happening? Has it suddenly become like a very good stock? Why are people running after it? Or is it like a horrible stock? It will come down again. People just simply choose to ignore what actually the business is. How does any AMC business work? It is based on one single component, which is called as AUM, which is asset under management. It simply means that, hey, there is a fund that HDFC AMC manages. Now, when the markets are going up, the size of this fund itself goes up. For example, when the stocks start giving returns, then the size of the fund will also go up, right? Because the mutual fund is doing what? They are creating this AUM, asset under management. What is this AUM comprises of? It is comprised of different mutual funds. What do mutual funds consist of? They are a collection of stocks. So when the markets actually start going up, so would the total value of AUM. What additional point will happen? Well, people will start investing. They will start giving their money to mutual fund managers. They will feel that, you know what, we are actually missing a bus. Now, imagine a scenario that if after 6 months, new highs of Nifty are made, you keep on reading in the newspaper that Nifty is making new high, new investors are making this much money, that much money. What will you feel? You will feel FOMO, you will feel greed, and you will keep on giving more and more of your money to companies like HDFC AMC. How do they actually make money? It's very simple. As the AUM grows, they go and charge 1 to 2% commission on this entire AUM. It becomes their business model. So to cut the long story short, if the markets perform well, then a company like HDFC AMC will start performing very well. People have started realizing it that, hey, we are actually on the cusp of a bull run now. In case you have missed that video, please go and check out the links in the description box. I have put that analysis there, and people are anticipating a stock like HDFC AMC to do well in the future. So I am bullish about HDFC AMC. Again, is it a push from my side for you to go and buy this stock? No, right? I mean, do whatever you feel like. I'm helping you understand things conceptually. Then pick that knowledge and utilize it, understand other people's viewpoint, and finally, if it makes sense for you, start building positions in it or do not build positions in it. So with that said, let me speak about the fifth and the most talked about stock, which is Meta. So here is the story of Meta, that Meta or Facebook has fallen by 70%. I had made a video on Meta. So what did I say on that video? I simply said that, hey, Facebook is changing to Meta. And why have they named themselves Meta? Because Meta is short form for metaverse. And Facebook or Mark Zuckerberg specifically thinks that the future of internet lies in something called as Web 3.0. In case you want to understand more what Web 3.0 is, tomorrow I'm going to do a YouTube member community post where I will extensively talk about this topic. So back to this. So Facebook is turning its business model from Web 2.0, which is the older version of the internet, so to say, to a better version of the internet called Web 3.0. Now people have started talking about that, you know what, Mark Zuckerberg does not understand technology. We know better. Mark Zuckerberg is a fuddu person. He does not know technology. What has he built? Only 2 billion people are using his product. How many comments like hard do I get? 2. So who knows better, Mark Zuckerberg or me? Me, right? So people think about it this way, and people have been giving him insane amount of gyan on the internet that, hey, your stock has crashed by 70%. You know nothing about tech, and this Meta thing is going to crash like anything. Think about it this way and use a little bit of rational logic. Look at history and you will be able to uncover the answer. So the logic is, please ask yourself, why is Mark Zuckerberg taking such a big risk with his company where he has literally rebranded Facebook into Meta? The reason is very simple, because he knows that Web 3.0 is the future, and if he does not pivot his business to Web 3.0, he will lose that race, and therefore he is putting his entire company on stake there. He has been building businesses since the time he has been 17, 18. We need to give him the benefit of the doubt that he understands how this pivot from Facebook to Meta needs to be undertaken. He has massive capital at his disposal, and if you are an investor in Meta, it's a very simple story. You will make money when Facebook actually converts to Meta in its truest sense. You are not going to make any money from Facebook's current version. That is not the bet that you are taking. Now, why is it that this bet actually makes sense? Okay, so here is history of Amazon very, very quickly. So you can see this, right? That it went all the way to approximately $5 back in 1999. Then it got crushed all the way to 34 cents. So from $5, it lost almost 95% of its value. And by how much has it grown since? And it has gone up all the way to 164.43. So there has been a 560 times increase, not percentage increase, on Amazon stock, if you would have purchased it at the bottom. For me, I am purchasing Facebook at its absolute bottom, and I am willing to take a look how that story plays out, because I feel that Mark Zuckerberg knows a lot more about technology than any of us would. He has massive resources at his disposal, and he has a very clear vision. Manifestation of such vision takes time. If you do not have the ability to handle volatility, please do not invest in that stock. Buy it at a later stage. In case you are looking to build position in such companies now, then it only makes sense if you can handle volatility. I hope you enjoyed this conversation. Do consider pressing the like button. It would allow these type of videos to reach out to more people, and you can check additional information in pinned comment box and description section. Thank you so much, and I will see you soon.